All right, here's Orlando Regional Realtor Association's State of the Market as of September. Soon we'll have the October numbers, but as of September, let's review these. What we're seeing out there in the market is pretty flat, so we haven't had much of a price increase or a price decrease, which we actually think is good, and we can kind of expect more of the same in our opinion. But let's go over the numbers individually here. You'll see inventory decreased a little over the last month, still up over 12% since 2024. New listings down a little bit as well year over year and pretty much neutral month to month. New contracts are going to be up year over year, which is good, and up slightly month to month. Pendings about the same, up slightly. Closed sales pretty much neutral or down. The median price continues to drop just a little, only a few $1,000s from $383,000 to $378,000. So hopefully affordability is creeping back into play for a lot of these buyers that have been shut out of the market. Average days on the market year over year is up, but month to month is down slightly. Same as month of supplies, pretty much the same on a month to month basis. So pretty much flat figures that ORRA has put out for everybody. The good news is that we had a brief drop in 30-year interest rates that have slightly come back up, but let's take a look at those. We're going to go on to HousingWire. This is a subscription service that we subscribe to at Cap Fund, and it gives us a lot of metrics to follow so we can get an idea of where we think the market is headed. But as you can see, November 13th, 30-year fixed rate, 6.37. Inventory is down slightly. The 10-year treasury, which probably most predictable for the 30-year mortgage, is about 4.13%. We've got some headline news here. Housing inventory falls as weekly demand grows. One thing that came out actually, I think yesterday, mortgage purchases were up dramatically, 30% over last year and about 6% week over week change. That means more people are applying for mortgages. And what happened is the Fed, we know, dropped rates recently, 25 basis points, and they're supposed to drop them another 25 basis points in December. So immediately after that last rate drop, the 30-year got to almost 6%, which was a low for the year. But what happened is this guy, evil Mr. Power, the Fed Reserve chairman, he came out in a speech afterwards and still said that he's fairly restrictive, moderately restrictive on the economy. So immediately rates on that 30-year and the 10-year went right back up. And so we didn't get too much of a drastic change, net drop from the actual 25 basis points drop. He seems kind of hawkish on housing and wants to keep inflation in check, and he's got an eye out for the job report, which is more important than housing according to the Fed. The good news is his term is up, and they'll probably put somebody on the Trump administration, more favorable to the Trump administration, as the next Fed chairman. We'll see. It may come out in December who they elect, but we think that the next person is going to have a goal in mind to get these 30-year mortgage rates down so we can get out of this kind of quasi-housing recession. So let's jump back and take a look at some of the other stats that are important. Yeah, here we go. Jobless claims, that's the next one to watch. If jobless claims start increasing dramatically and break through this kind of 260, 300,000 threshold, I think you'll see rates drop significantly. That means the economy may be in trouble, and that's kind of like the headline news right now is, are we losing jobs too fast? Other things up here, let's see, percentage of properties with recent price reductions. This number's starting to creep up. It's now at 41.7% for 2025. Typically, that's numbers usually higher in the 30s, which means that people are cutting their prices, and it could be turning towards that buyer's market. Pending home sales with that mortgage application has been up slightly. Anytime you get closer to 6%, we're going to see that continue to rise, the pending home sales. But we're stuck in that 6-7 range over there, so we'll see if we can get sub 6, where we should see a ton of activity where demand really starts creeping up. All right, well, let's take a local look at kind of the counties that Capital Fundings is servicing and that hopefully you guys are looking out for. This is home values, and home values increasing on the high end are more towards red. So, Orange County, a little over 400,000. Seminole County 400,000, Volusia 340 or 320, Brevard 341, and making your way over to the Tampa Hillsborough. It's kind of interesting that those home values are actually a little bit less than Orlando, Orange, and Seminole County. So just something to keep an eye on. But home growth year over year, Orlando, Orange County, Seminole County down 4% year over year. This is kind of what we thought, somewhere in that 3 to 5% range. Osceola 5, Brevard, Volusia hovering right there around 5. Tampa is about 5. Pinellas still negative, almost 9%. But these have actually come down a little, so we kind of seen some stabilization as each month enter a new data set. But we're seeing a little stabilization in that pricing, which is good. So year over year, home price forecast for the next year, 2026, Orange County down 4.4, Osceola 8, Seminole County 3.8, that kind of leads the way. Tampa, Hillsborough 5.3, Pinellas about 8%. So Brevard 5.7, Volusia 5.9. So kind of more the same of what we saw last year, which was somewhat flat to a small price decrease depending on where you're located. And then also, these numbers are actually coming down. A few months ago, they were more in the 7% ranges, so that's a good thing. Overvalued, how are they overvaluing? And this is based on affordability, so kind of takes into wages and stuff like that, rents, and it looks at how affordable these houses are. Still, Orange County 10%, Seminole County 20%, Hillsborough overvalued 10%. I remember a couple months ago, these were all 14, 15 and up, so these have come down as well too. That means that prices have dropped, maybe with inflation and wages growth, affordability is getting a little bit better. So this is good as we can come down towards zero. Maybe it's a neutral market. I think we're somewhere in between neutral to buyer's market, but it's still kind of a neutral market. It's not a seller's market. It's not a buyer's market. I think it's somewhere in between. So anyways, we can dig deeper on these down to the zip code level. If you have any interest, reach out to us. We'll be glad to help you out. One thing not to forget is that you can do your own analysis on our website. That's right. Go to capfund.com, click on market reports. You can look by zip code right here or scroll down and we've got county level reports here. And this is something that we're following. This is Altos Research company and they provide their own proprietary market index score. It gives you just a gauge of multiple variables to equate to a score. And then they track it month by month to see where it's going. We have that information. I'm going to do another brief podcast on zip codes, what's performing, what's not performing in counties as well too. But anyways, if you want to do that market research, hop in here. We've got a renovation that we're following online at 32807 Azalea Park. Let's take a look at it. Okay, Azalea Park, a 39, which is a slight seller's advantage in the market. And we can click on multiple different variables here. Let's see, median list price, but let's go to average days on market. And then we're going to click on here, market segments. And so this way you can kind of break down, okay, I think we're going to be going to market around $350,000. And so we're going to be in that third quartile, which is the lower 90-day. So if we want to just highlight a couple years worth of data, you can see, all right, average days on market for us on this property is going to be dropping, almost kind of staying the same if you look at it for the last 6 months to a year. But you also got a lot of different metrics on here. Properties with price decreases, you can see if market is dropping to follow trends there. Holding up pretty good in our market segment. And also let's go on to inventory. You definitely want to know who you're competing against, and pretty much flat as well too for the last year. And then they'll give you that market index score. So based on their variables, is your market getting better? And for us, let's go February 2025 at a, let's see, 33.3. Now we are at 38.62. So it's improved a little over the last year. But anyways, all this information is available for you for free. We provide it to you on our website, capfund.com. I hope this market update helps. We should be getting some new ORRA numbers in the next few days. As soon as I get those, I'll do some quick content for you guys to give you an update. Hopefully this fix and flip you're working on is going to be profitable. If you want us to determine what we think the market value is, reach out to us. We're glad to do it complimentary to give you an idea of what you think you should be pricing it at. Compare that with your realtor, compare that with your own analysis. We're glad to help. Remember, Capital Fundings, we're here for you. We want to be partners on your next fix and flip. Anything we can do to help you become more profitable, we are there for you. All right, until next time.